welcome students. Welcome to the lecture for Junior Bookkeeper, Payroll and Monthly, SARS, Returns, ICB. My name is Ndeshipewa Kwenge. I will be your lecturer for this subject. My contact details are below: 081 4699 338. You can call me if you do have any questions relating to the subject. We are going to go through 3 exercises today in detail. Exercise number 1 will be taken from your textbook, page 18 to 19, self-assessment activity number 1. You are required to do a few questions based on the trial balance that you were provided with. We'll look at question number 1.1, specifically asking you to calculate the current assets. Current assets, as per your book, let's just look through them. Your first one is your bank, made up of 7,400.90. We also add together the debtors control, which is 12,809.25. You add your petty cash, which is also part of your current assets, of 1,565.58. You add your trade inventory, which is 7,827.88. And finally, you will add your cash float of 3,842.78. Altogether, your current assets for the period as at 31st January 28 will be 33,446.39. It's very important that you know the definitions of your current assets and your non-current assets. We move on to calculate our non-current assets, which are made up of your land and buildings of 426.975. Together we add your motor vehicles, which is also a non-current asset, of 227.720, plus your equipment, which is 344.426.50. And then finally, your fixed assets, which is a fixed deposit. And it only matures on the 1st of June 29. So it's not a current asset currently. We are going to have it, but it's a non-current asset. So that's why we are going to put it under non-current asset. So altogether, your non-current assets will be 1.033279.50. The next task that you were given is to calculate the current liabilities. Our current liabilities are made up of they are made up of the mortgage, our creditors control. We have a creditors control account of $15,086.45, plus our credit card account, which is 40,847.28, plus our SARS. That's the amount, your 10,389.73. That's what we still need to pay to SARS, to the receiver of revenue. So your total current liabilities are made up of $66,323.46. 1.4 says calculate the non-current liabilities. Your non-current liabilities, there's nothing to calculate because you only have the mortgage loan as per your book, which is 485.669 Namibian dollars. We move on to calculate our net profit for the period. Now you will see that the statement or the information that you were given was divided into 2 sections as per your book. You have the balance sheet section, and we already calculated our current assets and current liabilities respectively, and our non-current assets and non-current liabilities. All those information, all the figures we got from the balance sheet. When we do our income statement or want to calculate our net profit, we work with our nominal accounts. To calculate our net profit, we start off by including the net profit for the year. That's what we need to calculate. We have our sales figure, which is there, $426. We have our sales returns. So these were all sales that we sold previously, but they were returned. So immediately they become an expense to us. Your cost of sales, it's $170, $790. Your cost of sales is what we paid for. Those are all the costs that we incurred to purchase our sales. Your rent income is an income because this is money that we are getting for renting out premises. Might be business buildings that we are renting out. It's made up of $34, $158. Your interest income that we probably receive from the bank on our fixed deposits or on our bank accounts, that's $15,940. Your service income, which is also in service income, it's $99, $627. Your rent expense is $25,333.85. Now with your rent expense, the same as your rent income. With rent income, we are renting out our premises probably. With rent expense, we probably are renting from someone and it's an expense that we need to pay out. Your bad debts is made up of $347.277. Bad debts are the debtors that we are going to write off, and it's an expense. It's a loss for us. Your wages and salaries, these are your expenses that you pay for your normal wages, for your permanent employees, for your contract employees. They're all made up of $64,046 Namibian dollars. Your cleaning materials is also an expense, and it's included. It's an expense. Your stationery is also included. Your internet service expenses, your electricity, those are all expenses. Your rates in services, your delivery expense, your bank charges, and your telephone and fax. Those are all expenses. And your total expenses are $345, $195.07. Your total income, as can be seen when you include all your sales, your rent income, your interest income, and your service income, they total $576,700.90. Now we need to calculate what is our net profit. We have already calculated our total income and we have calculated our total expenses. Your net profit is your total income less total expenses. So it's the $576,700.90, which is your total income, less your total expenses of $345,195.07. Your net profit for the period ending 31st January 20.008 is $231,505.83. We now have to calculate our owner's equity. There are two methods that you can use to calculate your owner's equity using the accounting equation, and you must ensure that you know the accounting equation. Your accounting equation is your owner's equity equals to assets less liabilities. This is very important and you will need it throughout your studies. Your owner's equity in the book is made up of 33. Actually, we start with the assets because owner's equity equals to assets. We have already calculated our assets. If you remember in slide number 1.1 and 1.2 respectively, we have calculated our current assets and non-current assets. Now, when we calculate our owner's equity, we say owner's equity equals to assets less liabilities. Assets meaning the accumulated. You will add your current assets to your non-current assets to get your total assets amount. So it will be 33,446.39 plus 1.033279.50. That's your assets. And the same with the liabilities. You will also calculate it as is to say your total liabilities that you've calculated in 1.3 and 1.4 respectively is then what you add together. Then you will say your assets less liabilities will give you your owner's equity, the 514.732.58. You can also calculate your owner's equity using the equity accounts. And it will be the same as the previous method. So when you are trying to use the two different methods, ensure that they balance. When the first owner's equity amount in your first method that you use the accounting equation also balances with the accounts method when you do it. If they don't balance, then you need to know that your owner's equity calculation that you have calculated is wrong. So with the equity accounts method, which is method number 2, we'll use our capital. The capital as at 1st February 20.7 was 384,650 Namibian dollars. Then we add our net profit, which we have also calculated in number 1.5, which is 231.503.83, less your drawings of 100,423.53. Your drawings is also provided in your balance sheet section. That's where you will find the 142 Namibian dollars as well. So your total is then 514,732.58. You will see that this method's calculation of your owner's equity and the previous method is the same. So which means that you have calculated your owner's equity method correct. Activity number 2 is on page 27. We'll move on to page 27. And it's 1H. There we'll calculate our VAT. The VAT per South African receiver of revenue is 14%. Your VAT rate. You are given 3 columns to complete. You are given the amount, the exclusive amount, your VAT exclusive amount, and in there you will see that there were some figures also omitted for you to calculate. And then you are given the figure or the column to calculate the VAT amount, and then you were also given another column to calculate the inclusive price. So let me just explain to you the difference between exclusive and inclusive price. Your exclusive VAT price includes only the amount before you add VAT. So when you go to a shop, example ShopRite, and your Coke is $5, but the VAT on it was 14 Namibian dollars. Before you include the VAT, before taking the VAT into account, the Coke is just made, for example, 5 Namibian dollars. That's your exclusive amount without taking the 14% VAT into account. The $5 will be exclusive amount. Then we say your inclusive amount is the $5 plus VAT, which is maybe 14% or whatever. So your inclusive amount take account of the VAT. Your exclusive amount, in the other hand, does not include your VAT. So we'll look at number 1. You were asked, number 1 was done for you to say that the exclusive amount was $100. For example, your chocolate cost $100. That's the amount before you add the VAT. What is the VAT? If I explain to you that the rate is 14%. So 100 times 14% times 100 will give you $14. So in total, your inclusive price is the $100, the exclusive amount, plus your VAT of 14, that will give you $114. So when you pay as a customer, you pay the 114 Namibian dollars. Let's move on to number 2. You were given the exclusive amount, so amount before any VAT, and you were supposed to calculate the VAT and also the inclusive price. So 600 times 14%, that's how you calculate it. You will get 84. 600 plus 84 will give you your inclusive amount of 684. Move on to number 3. Number 3, you were only given the inclusive amount. You needed to calculate the exclusive amount and the VAT. So if 456 is your inclusive amount, our VAT is included in that. How do you take out the 14% VAT? You will say the 456 divided by 1 times 1 divided by 1.14. So, meaning, if you take your calculator, and you say 684 times 1 divided by 1.14, what is the total that you will get? 684 times 1 divided by 1.14. You will get 600. Meaning your 600 is the exclusive amount. And if you see in my exclusive amount for number 2, it is 600. That's exclusive. And we know that 14% is our VAT. So you can calculate to say, if you want to find out what is the VAT amount, you have two ways. You can say the first one, you can say 684 less 600 will give you 84, which is the 14% VAT. Or the second one, the second method, you can say 600 times 14%, which will give you 84. Still the same answer as that one. Let's move on to number 3. Your exclusive amount is 400, your VAT amount is 56, and your inclusive amount is 456. Your 400 plus your 56. It can still be worked out on the same principle as the one that I've explained to you in number 2. The same with number 4. Your exclusive amount is 1,000 and your VAT amount is 140. Your inclusive amount is 1,140. Number 5, your exclusive amount is 10,000. Your VAT at 14% is 1,400 and your inclusive amount is 11,400, meaning your exclusive plus your VAT. Then number 6, you have exclusive 20,000. Your VAT on 20,000 at 14%, at the rate of 14%, is 2,800. Inclusive amount is 22,800. Also number 7, and our last example, you have 16,300 as your exclusive. Your VAT on 16,300 is 2,282. Altogether, what you are going to pay as a customer will be 18,582. Number 8, you move on. 1,200, 1,608, that's your VAT, and then the total inclusive is 1,368. Number 9, you have exclusive amount of 1,500. The VAT on that is 210. All inclusive 1,710. Number 10, 2010. Your VAT on 2010 is 281.40 cents. Your all inclusive, that what you're going to pay as a customer is 2,291. And number 11, 25,400. 3,556 is your VAT at 14%, and 28,956 is what you are going to pay. Number 12 is 1,050. 147 is your VAT at 14%, and then altogether is 1,197. Number 13, your exclusive amount is 1,300. Your VAT on 1,300 is 182. All inclusive is 1,482. Number 14, it's 4,950. That's your VAT exclusive. Your VAT is 693, and then all inclusive 5,643. Number 15. Let me just go back to number 15. 25,500. Maybe we can just do a last one all together so you can see what I explained to you. If you are given your exclusive amount, which in this case is 25,000, and we know that our VAT is charged at 14%. We then say 25,000 on your calculator times 0.14%, it's 3,500. So this is the VAT, and this is your inclusive amount. Your inclusive amount is made up of your exclusive amount plus your VAT at 14%. So if we say 3,500 plus 25,000 equals to 28,500. And it's the same on your slide, the 28,500. It's very important that you know the difference between your exclusive amount, your VAT amount, and your inclusive amount, and also how to calculate all of these figures respectively. So if you were given only the inclusive amount, you will only say this amount, your inclusive amount, times 1 divided by 1.14, and then it will bring you back to the exclusive amount. Let's just make an example. If you were to have just been given the inclusive amount of 28,500 and we want to know what is our exclusive amount, we'll say 28,500 times 1 divided by 1.14. 285 divided by 1.14. Then you will get the 25,000. The 25,000 then becomes your exclusive amount. To get your VAT, the 14%, you can either use two ways, as I've explained previously. You can say your inclusive amount less your exclusive amount will give you the 3,500. Or you can say 25,000 times 14%, the VAT will still give you 35,000. Let's just see if that's true. 25,000 times 0.14, and you will get 3,500, which is your VAT. I hope you did understand how we do calculate VAT. Let's move on to activity number 3. Activity number 3 is on page 28.28 to 29. There's a difference between your VAT input and your VAT output. When we fill out the VAT returns, we use our VAT input and our VAT output to get our tax due or receivable to us. Your VAT input are all your purchases. It's the amount of VAT that you spend when you bring in items, when you bring in purchases, when you pay your electricity, when you buy your purchases. For example, if you sell chips, when you purchase chips and you are manufacturer of chips, or the raw materials you use to manufacture your chips, that's the purchase, that's the VAT input. Your VAT output, on the other hand, are your sales. As you make sales, you obviously charge VAT if you have a VAT registered vendor. Those are your VAT output. Also, what's important to note is for you to know that your VAT input plus your VAT output, what you have sold less what you have purchased, that becomes either payable to you or payable to the receiver. So on a monthly basis, after every 2 months, people fill out VAT returns to SARS to show their status, to say that this is what they've purchased for the year, this is our VAT input, and this is what they've sold for the year. So the difference, as I've explained, becomes either payable to the receiver of revenue or receivable by you from the receiver of revenue. There's an example, a very detailed example that we are now going to do for activity number 3. On page 28 to page 29, we'll now calculate our VAT input first. First of all, we'll see the second-hand trailer is taxable. There was VAT, we had to pay VAT on it. And as I explained previously, 25,000 is your amount including the VAT. Let's just see if that's true, because the VAT that they are saying that they had paid was $3,070.18. 25,000 times 1.14 minus 25,000, which is 3,070 Namibian dollars. So this one, to explain to you how they got the 3,070 Namibian dollars, they say 25,000 times 1 divided by 1.14. 25,000 times 1 divided by 1.14 times 1 divided by 1.4. So now, because your VAT amount, this is a VAT inclusive, you will say it's 25 times 1 divided by 1.14. Do you see the difference now? Then you will get the amount excluding VAT, which is your excluding VAT. This amount that you paid, your 25 minus the excluding amount will give you the VAT, which is 3070, as can be seen on the PowerPoint presentation. So for second-hand trailer, they had to pay an additional VAT of $3,070. So now they are telling the receiver that, look, we paid $33,070 for purchases. It's either we get a refund or we don't get a refund based on what we sold. Let's look at purchases. They also had purchases of 43 Namibian dollars, 43,690. The same theory applies as with this exercise. You will still say 43,690 times 1 divided by 1.14. And we get what? Let's see. 43,690 times 1 divided by 1.14. And then you get your 3. We say 43,690 times 1 point. Just give me a second. 43,690 times 1 divided by 1.14 equals to 38,325. So this is the amount that they only had to pay if the VAT was not included. And this is your amount. The 43,690 is the amount including your VAT. If we have to say 43,690 minus 38,325, then we get our VAT amount of 5,365, as you can see on the PowerPoint presentation. Fuel is 0 rated because you can't claim tax on it. Your oil is taxable, and they have calculated this as per the 2 examples that I have explained. Your repair of delivery vehicles is also taxable at 120. Your stationery is also taxable. We paid a 44.82 Namibian dollars of tax. Entertainment is exempt. You can't claim any tax on entertainment. That's what it means when they say exempt. Your VAT for August, September, not a supply of goods or services, it's 0. Your telephone, you can claim tax on it, or you can claim VAT on it. Your wages, not a supply of goods or services, because remember, with wages that people already pay as you earn. Rental paid, you also pay tax, or you can claim tax. Your motor car, no claiming of VAT input, it's 0.0. Your postage, you can claim the VAT. Your license for motor vehicle, no, it's exempt. You can't claim VAT. Your interest on bank account is also exempt. Your bank charges, it's taxable because there is VAT in there. And then your insurance, you can claim VAT on it as well, 71.23. Your delivery vehicle and your motor vehicle. Now we move on to our VAT output. So we've told the receiver, look, this is what we have paid for. To be able to operate. This is what we paid. We paid for telephone, we paid for our sales. This is our VAT that we have paid. Now, this is our VAT that we are supposed to declare, to pay over to you, which is your VAT output, your sales, all the VAT that you've charged on your invoices. They say cash sales, your sales that you made for cash. You had invoices, so when you're making cash sales, when you gave your invoices, you had VAT as well in it. So people had to pay you VAT, a 14%. But remember, the VAT that you charge people, you have to pay it over to the receiver. Your input, your output VAT. You have to pay the 14% to the receiver. But only once you have netted it off against your input VAT. So, meaning what I'm trying to explain to you is to say that the VAT that we have now calculated, our input VAT, our input VAT on purchases, so on our daily operations, we are telling the receiver, this is the VAT that we paid. Now we are telling the receiver with VAT output. We are telling the receiver, this is what we have charged. This is what we are supposed to give you over. So we are going to give you X amount of money, but you need to give us X amount of money back. So what happens on a normal VAT return form, when you submit your VAT, you say your VAT output, for example, 50. We charge people $50 Namibian. This is what we have to give you back. But we were also charged on our VAT input when we purchase materials or whatsoever. We were charged $40. Meaning what? We are only gonna pay a bill to the receiver. It's only gonna be $10. So that's how people do it every time they submit their VAT returns. They say this is VAT output. This is what we have charged on our invoices when we make sales. This is our VAT input. This is what we had to pay to be able to get our stuff. Or this is what we paid for our water and electricity, the VAT that we paid on our water and electricity. So we are only going to give you $10. To move on to your sales, they have cash sales, and the VAT on that was 2,249. Your exports is exempt, so it's 0.00. Your credit sales, you had VAT of 729. So in total, the VAT that you have declared on your sales, or your what we call the output VAT, was 2,986. So refund due. We said we paid purchases, on our purchases, when we made purchases, when we paid for rent, when we paid for electricity, when we paid for water, and when we paid for all our expenses, our total VAT was $20,038.69. On our sales, we are supposed to give you back what? 2,986. So what we are to get back from the receiver will be 17,051 Namibian dollars. That was all for this subject. I hope you did get or grasp the basics of VAT, how to calculate your VAT, what it means, what the difference is between output VAT and what the difference is between input VAT. Feel free to contact me on my cell phone, SMS me, or call. Good luck with your exams. The end.